When most people hear the word crash, they imagine chaos, screens flashing red, traders shouting, and families watching their savings vanish overnight. But history tells a different story. Every major collapse from the Roaring Twenties to the Great Recession didn't just wipe out wealth. It relocated it, from the emotional to the prepared, from the dreamers to the disciplined, from those who followed the crowd to those who quietly positioned themselves before the fall. In 2026, that cycle may begin again. The headlines will call it disaster. The experts will call it unpredictable. But if you understand the rhythm beneath the chaos, the pattern that's repeated for over a century, you'll see it for what it really is: a reset. The greatest transfer of wealth in modern history is already loading. The only question that matters now is, which side will you be on when it hits? Here's the paradox no one teaches in school. Crashes don't destroy wealth. They simply transfer it. While the majority panic, a small, disciplined minority quietly grows richer than ever. It happens every single time. In 1929, when fear ruled the streets, John D. Rockefeller bought assets for pennies on the dollar. During the dot-com collapse, patient investors scooped up future tech giants when they were treated like junk. In 2008, as the world screamed, "End of capitalism," a handful of hedge funds and long-term thinkers bought the bottom and rode the longest bull market in American history. The public always loses faith. The rich never do. They simply switch sides. They sell when everyone is euphoric, and they buy when blood runs in the streets. It's not luck. It's not timing. It's a pattern, one that has repeated for over 100 years. And it's about to repeat again. Because this time, the signs are flashing red everywhere. And yet, the experts on TV say, "Don't worry, the economy's strong." They said the same in 1999. They said it in 2007. They were catastrophically wrong both times. This isn't conspiracy, it's history. Let's rewind the clock. Because the best way to see the future is to study the patterns that built the past. 1929, the fall that forged fortunes. It began with champagne optimism. Stocks could only go up, or so they thought. Then came October 24, 1929, Black Thursday. Within days, $30 billion vanished from the U.S. economy, a number equal to the entire federal budget at the time. People lost homes, jobs, and hope. But quietly, men like John D. Rockefeller and Joseph Kennedy started buying when everyone else was selling. Rockefeller famously said, "Fortunes are made when blood is running in the streets." He wasn't joking, he was observing a pattern. Those who held courage when fear ruled built dynasties that lasted generations. 2000, the dot-com implosion. Fast forward 70 years. The internet was the future, and every teenager with a website was suddenly a millionaire on paper. Then, in March 2000, the bubble burst. The Nasdaq lost 78% of its value. Billions in market cap disappeared in months. Amazon collapsed from over $100 a share to just $6. Netflix traded for less than the cost of a single DVD rental. Investors ran for the exits. But those who stayed or bought during the ashes watched their portfolios multiply 10, 20, even 50 times over the following 2 decades. The ones who had the patience to buy chaos became the next generation's millionaires. 2008, the crash that rewired capitalism. Now jump to the financial crisis of 2008. The housing bubble imploded. Banks fell like dominoes. Lehman Brothers collapsed. The world looked over the edge of a financial cliff. To most, it was Armageddon. To a few, it was arithmetic. They understood debt cycles, liquidity traps, and human panic. They bought real estate at 30 cents on the dollar. They purchased blue-chip stocks, Apple, Google, Johnson & Johnson, at prices that seemed absurdly cheap. And they held. Within a decade, the S&P 500 had tripled. That end-of-the-world moment? It became the beginning of the greatest bull market in modern American history. The lesson is simple but brutal. Every crash is a transfer of assets. From those who panic to those who plan. From the leveraged to the liquid. From the fearful to the disciplined. Each era told the same story, different names, same psychology. Boom, euphoria, debt, collapse, reset. wealth transfer. And today, we're walking the same path again, only this time the stakes are bigger than ever before. History doesn't repeat, it rhymes with the same rhythm every 18 to 20 years. It has called the economic reset cycle a mathematical heartbeat that has pulsed through America for over a century. 1929, 1949, 1969, 1989, 2008, and now, 2026. Each cycle begins the same way: easy money, cheap credit, a government that promises prosperity forever. Then comes the addiction, speculation, greed, and the illusion that growth can outrun debt. And just when people start to believe this time is different, the math snaps back like a rubber band. Let's look at the signs. The Shiller-Cape ratio, which measures how expensive stocks are compared to their real earnings, is now at its second highest level in history. The only time it was higher, 1999, right before the dot-com collapse. Consumer debt has exploded to record levels, higher than any generation before us. Corporate America is drowning in cheap loans that turn toxic the moment interest rates rise. Government spending has gone parabolic to the point that even the Federal Reserve is starting to whisper what no one dares say out loud: the system can last forever. And yet, Wall Street cheers. Politicians smile. The media tells you it's all fine: soft landing, resilient economy, temporary inflation. Sound familiar? They said the same in 1999. They said it again in 2007. They were wrong both times. Because the pattern never ended. It only grew larger. Back then, $1 trillion of debt was unthinkable. Now, the U.S. government owes over $36 trillion and rising by $1 trillion every 100 days. It's the same movie, just with bigger numbers, faster credits, and a more fragile system. And like every movie, it's heading toward its climax. They built the same structure again, only this time, it's made of glass. So where are we now? Right back on the edge. The warning lights are flashing, and the people paid to notice them are pretending they don't exist. Let's start with the facts. The Federal Reserve's balance sheet has exploded from under $1 trillion before 2008 to more than $8 trillion today. U.S. national debt has crossed $36 trillion, climbing faster than any time in history. Buffett's Berkshire Hathaway is sitting on over $300 billion in cash, the highest in company history. When the world's most patient investor stops buying and starts waiting, that's not random. It's a signal. Meanwhile, hedge funds are quietly shifting billions into gold, commodities, and defensive sectors. Institutional investors are rotating away from speculative tech into hard assets, the kind that survive when the lights go out. But on Main Street, the story feels different. Wages can't keep up with prices. Credit card debt has hit record highs. Commercial real estate is cracking. Empty office towers stand as silent billboards of denial. And the average American is juggling rising rent, higher food costs, and shrinking savings. Yet the headlines insist the economy is strong. Unemployment is only 4%. Inflation is cooling. Confidence, they say, is back. That's exactly what they said in 1999. That's what they said in 2007. And within months, everything collapsed. Because what's building beneath the surface isn't stability, it's pressure. Pressure from rising rates. Pressure from overvalued assets. Pressure from a generation that's been told to borrow, spend, and believe the system can never fail. But systems always fail when math replaces hope. And if history is any guide, 2026 won't be just another correction. It will be a full reset, a transfer of power and wealth on a scale the world hasn't seen in decades. The rich aren't running scared. They're positioning. They know exactly how the story ends, because they've read it before. So what does all of this actually mean for you? It means the abstract numbers you hear on the news aren't just numbers anymore. They're your paycheck, your rent, your retirement, your future. When the system bends, the shock doesn't hit Wall Street first. It hits your grocery bill, your mortgage payment, your credit card balance that never seems to go down. When inflation eats your dollars, it isn't a headline, it's that uneasy feeling when the same 100 buys half of what it did last year. When interest rates climb, It isn't an academic theory, it's the difference between keeping your home and losing it. When markets crash, it isn't about hedge funds, it's your 401k, your savings, the security you thought you earned. And yet, there's another truth here, one that history whispers every time chaos returns. In every crisis, someone walks away wealthier, not because they're lucky, but because they're ready. While others panic, they hold cash. While others sell in fear, they buy in silence. While others chase the illusion of safety, they accumulate real value: land, productive businesses, hard assets. Crashes expose who's over-leveraged and who's disciplined. They strip away illusion and reward preparation. So when the next shock hits, and it's not about how much you lose. It's about how you're positioned when everyone else freezes. Most people will see the 2026 crash as the end of their dreams. But for the few who understand the pattern, it will be the beginning of their opportunity. Because wealth doesn't vanish in a crisis, it just changes hands. Here's the truth that most people will learn too late. Every crash is a transfer not of money, but of mindset. The unprepared lose not because they're unlucky, but because they never believed the cycle could turn against them. They followed emotion, not evidence. They trusted noise instead of history. But the prepared, the few who study the pattern, know that every collapse has two sides: destruction for some, creation for others. They understand that panic is temporary, but value is permanent. They don't chase trends. They accumulate truth. Look closely, and you'll see the architecture of this next reset already forming. Governments choosing inflation over discipline. Central banks printing to delay the inevitable. Investors hoarding cash and gold while the crowd chases AI stocks and political promises. It's all happened before, only the names have changed. History doesn't punish. It simply repeats the test until we learn the lesson. And the lesson is this: the crash isn't coming to destroy you. It's coming to expose you, to reveal whether you've been building your life on illusions or on understanding. Because in 2026, the greatest wealth transfer of our lifetime won't care who's right. It'll reward those who were ready, those who had the patience to wait, the courage to buy when fear peaked, and the wisdom to see that the end of one cycle is always the birth of another. They built the system, we inherited it, and now it's our turn to decide what comes next. If this changed how you see history, subscribe, because they buried the truth for 200 years.